Good evening, everybody. How's it going? Welcome in, welcome in. Also doing pretty well, Easy. Thanks for asking. Excited to get this one going tonight. Definitely felt bad about missing last night, but I'm ready for tonight. We're gonna get started here in just a couple of minutes. Just gonna give everybody the opportunity to hop on in before we get going tonight. Oh, awesome, Easy. Yeah, this should be a fun lecture for you then. Happy to hear it. How's everybody's week been so far? Hopefully you all have been treated well. It's been quite the week, definitely. Just gonna give it a couple more minutes and then we'll get going. Green week so far. Yep, that's the goal. Definitely can't go wrong with that. All right, just gonna give it 1 or 2 more minutes, then we'll get going. Playing Disney earnings. Oh, interesting. Yeah, I haven't looked into them at all recently. I mean, broke that 200 into the report. It's definitely not a bad sign for sure. I think the last time I talked about it, I said I was looking over this 97 to get involved if I was going to, which looks like it's made a nice move above there at this point. Definitely a positive. Yeah, we'll see. Good luck. Let me get one more message going, letting everybody know we're getting started, and then we'll get right into it. All right. Well, it's a couple minutes after the hour now, so I don't want to keep anybody waiting any longer than we already have. Welcome into the lecture, everybody. Sorry that I missed last night. Was feeling a bit under the weather and tried to tell Archon I was canceling, but he thought I was just kidding, which obviously that didn't work out. Anyway, thanks for being here tonight, everybody. Tonight, the plan is to talk a little bit about the volume profile, what it is, how to use it, why it's important. And also, I wanted to spend some time reviewing some prior market winners. So, over the weekend, I spent a good amount of time just looking through some of the biggest winners in 2024. Uh, just a little bit of backtesting, figuring out how I could have figured out how they were going to be such a massive mover earlier in the game and some signals that maybe came with it. So, wanted to study that personally and then figured I'd share some of the research that I did with the rest of you all. So I think that's going to be a good place for us to get started tonight. We'll just take a look. I have this little PowerPoint that I threw up together. Just taking a look at some old charts. Pretty much some of the most significant, I'll say, mid to mega cap names with significant moves higher this year. So without further ado, let's get into that. And then in like 20-ish minutes, we'll start talking about the volume profile, how to use it, and why it's important. As always, guys, if you have any questions, comments, concerns that come up throughout the lecture, just go ahead and put them in the chat. If I miss them, just send it again. Sometimes I miss your comments. I'm not ignoring them. All right, that's enough of me talking. Let's get right into it. So I didn't create this with intent of presenting it to anybody. This was mostly just for myself. So apologies if it's not the most beautiful PowerPoint you guys have ever seen. But really, I just made a list of some of the strongest performing stocks in 2024 with a bit of variety. So a couple different sectors, different market cap sizes. So obviously we have our Nvidia and Amazon representing our mega caps. We have some kind of, I'll say, smaller caps, even though they're really not, with your PLTR, Kava, Carvana, and then some more theme focused stocks. So Coin, Hood, GEV. Anyway, let's take a look. A lot of what we cover in these specific examples are going to be things that I've talked about over the last, I don't know, 2-ish months in lecture. That said, if you guys have any questions, comments as to why I care about some of these things, I'm happy to explain more. And maybe even this could lead to some more detailed lectures in the future. So let's get right into the first example. This one was Kava. This one also reported earnings today and gapped all the way up to 170. Starting on the left side of the chart here, this one was an IPO back in mid-2023. And with a lot of the IPOs from really late 2021 all the way up into the end of 2023, most of them really didn't do very much. A lot of them IPO'd near their relative highs and ended up declining from that IPO price. For those of you who aren't familiar with that, I think IPO, I don't even actually remember what it stands for. Initial price offering? I don't even remember. That's funny. Anyway, it's the first day a stock is listed on the market is going to be that IPO. So anyway, it set these highs right around the $50 spot, made this break above the IPO highs on pretty below average volume, I'd say, and then went into this longer term basing period and effectively did nothing. And one thing that I really, initial public offering, God, why did I not remember that? Thank you, SK. Yes, initial public offering, duh. Anyway, what marked the bottom of this specific name was this massive weekly volume with a bull bar closing near its high. And ever since we saw this bar coming with the most weekly volume this name had ever seen, with a move back above the 10 and 20 weekly EMAs, this name never saw these lows again following this candle. And this is a theme that you're going to see repeated throughout some of the biggest winners throughout 2024 is they experience these longer term basing periods. They ended these basing periods with significant volume as they came out of the space and ultimately never turned back. And the weekly EMAs remained positive, trending upwards the entire move higher, making it really easy to kind of follow this trend. So here we got this break back above the EMAs. EMAs cross back positive, which is indicated by this green cloud here. So this cloud represents the 10 and 20 EMAs, 10 being the shorter term EMA. So when that 10 is above the 20, we get this nice green cloud indicating that that trend is higher. So we got that first kind of retest of the EMAs while we were still in that base. And then we come back, test these IPO highs, break above that, retest that and hold that. And then once again, break above those prior 52-week highs on rising volume, retest that, hold that once again. And this probably ended up being the most ideal entry, is coming back to these prior swing highs. We have rising EMAs. I mean, a super controlled pullback right into these EMAs. In hindsight, this is definitely the most ideal place to enter. But the theme of this one really, and something that we'll see repeated, is that these longer basing periods, especially for these fresh IPOs, lead to significantly extended moves to the upside. So following this basing period, this one increased 200%, all the way up to about 250% as of today on earnings. And the most important thing to be paying attention to is these weekly swing highs and swing lows. So really 2 lessons to start us off from this specific chart. Number one, pay attention to volume in these basing periods. It can certainly indicate a significant bottom forming. And then also pay attention to these pivots in the trend. These are the easiest places to define risk for both ourselves and institutional traders, and 100% always going to be pivot points for us to pay attention to. And these specific lessons are going to be repeated over and over again. So we'll just keep going throughout a couple of these examples, and I'm sure we'll see the same theme continue to appear. So Carvana, similar idea here. This name back in late 2021 was trading all the way up at 376 per share, and ultimately started this stage 4 decline. You could see this decline started when we broke below the EMAs, 10 dropped below the 20. Me personally, I'm a long focused trader. So for the most part, I'm not really looking to get involved in bearish opportunities for the most part. So generally speaking, when price is trading below these weekly 10 and 20 EMAs, it's a name for me to avoid. There's always something with relative strength for me to focus on instead. So for the most part, I could care less about a name that is trending lower. One thing to note is that we got this first significant rally attempt back into these EMAs. You can see this was the sharpest rally attempt we had gotten. No reason to get involved long, right? We're still below a declining set of EMAs. However, this pivot definitely remained important, and just another reason to be mindful of these key pivots from the weekly time frame. So moving forward, Carvana entered this long basing period characterized by multiple weeks of significantly above average volume. So here we got the highest weekly volume ever for this name, which is 100 times or more the average volume back in 2021. Multiple weeks of this significantly above average volume. One thing to note, and one lesson that you could learn from a lot of different people, is that institutions are always going to be accumulating at the bottom and distributing or selling their positions on the way up. For whatever reason, right? Institutions perform the best research. They have the most insider information. They know the perfect places to buy. They know when to buy, when to sell. And as a result, they're always entering, well, I'll say the best institutional traders are always entering near the bottom and they're selling near the top. That's just how it is. And all we can do as traders is look for signs of those institutions entering and use those signs as reasons for us to get in a given trade. So here we have a similar signal. We have these EMAs flipping positive coupled by significantly above average volume, which is the same idea that we saw on Kava. Once we got this EMA flip on the weekly time frame, we never saw these prices again. And just be mindful, this name experienced almost a 99% decline. So from 376 per share all the way down to about $3.60. So literally a 99% decline, or 90% decline, I think, not 99. Anyway, close enough. Regardless, this name was absolutely beaten down. We got this weekly EMA cross to the upside, 10 and 20 EMAs flipped positive. We continued throughout this basing period, right? So you certainly could have maybe taken an entry while we were still basing, but honestly, this is the pretty clear entry, right? When we break about outside of this base, we clear this prior pivot. EMAs are trending positive. This was before we had set or after we had set rising or higher lows into this horizontal pivot. And ever since this point, price has never revisited this area. You can see it has been in an absolutely perfect textbook uptrend since this point. Is this considered a cup and handle? Yeah, I mean, you could probably squint and call it that. I think that would be technically fine. I personally just refrain from using those terms just because I don't really like the names of patterns. I just think it's easier to call something a base because ultimately you're looking for that contraction in both price and volume as we move throughout that base. But anyway, so we've looked at two examples so far, and I want to slow down just a little bit because I know I'm throwing a lot at you guys and maybe this wasn't exactly what you have expected, but you may or may not realize why I'm covering these examples today. I'll tell you now, the reason being some of the names that were up 20, 30, 40% recently had a similar trigger, such as this breakout on Carvana or this breakout. Oops, that's NVIDIA. Wait, why can't I go back? Oops, it's not letting me go back. I'll just click back here. Anyway, it recently had a breakout like this base breakout for Kava or this base breakout for Carvana. And these moves increased, some of them 20, 30, 40% on Monday, right? Following a base breakout similar to this. This is why this theme is so important right now, is because so many names, so many of these kind of less appreciated names have been beaten down for the last 2 to 4 years. And after that long period of basing, institutions have entered back into given equities and are now essentially waiting for price to begin moving higher once again. And it's on us to start identifying these sorts of opportunities and get in at this point, right? Because there's a lot of these bases starting to break out, a lot of these bases almost done developing in the market. So it's really important for us to begin identifying these and really act on these. And I'll go through a couple examples that have happened just this week alone to just kind of prove to you the significance here. With that said, is everybody following me so far? Am I saying a bunch of things that are just going over everybody's head? You guys understanding why I'm saying the things that I am? Is this all making sense? What are your guys' thoughts? Questions, comments so far? Errol's feeling good. All right. I know some of you who have been in my lectures for the past, 3 years at this point, but definitely the past couple months are probably familiar with most of what I'm talking about, but maybe those who haven't been might have some questions. So if you have any questions, definitely don't hesitate to ask. Just kind of a quick aside. A lot of what I'm paying attention to in my strategy is these shorter term EMAs, or I guess shorter length EMAs. So the 10 and 20 EMA are kind of my bread and butter. It's not something that I have developed on my own. Some of the, I'll say, greatest traders have pioneered this strategy, and I'm sort of just piggybacking off of that. So I'm not necessarily reinventing the wheel here. I'm mostly just, I don't know, doing the same thing, I guess. All right, so that's Carvana. NVIDIA, very, very similar idea, right? This one didn't have as significant of a base forming. However, it set this massive, significant pivot back at now 30 post-split in 2020 and 2021. The bear market begun, and as a result, generally speaking, it should be uninteresting to us if we're looking long. We got this first EMA crossback with a higher low where we got that first EMA cloud flip with a 10 above the 20. Definitely could place a buy here. Sometimes it's going to be harder to take that entry, but certainly possible. Here, though, absolutely clear as day base breakout, right? Increasing volume, bull bar closing near its high, and then a consolidation above that prior base. So important to realize that this sort of consolidation after we break out of a massive base like this is absolutely not bearish, right? This is the sort of price action that you want to see if you would expect a name to continue higher. Continuing on, we can see, again, very similar idea from GEV. This is a kind of power name. They essentially are kind of responsible for all things power. They spun off recently from General Electric and now are being traded on the marketplace. And same idea, right? We have a nice tight range forming as price consolidates. Once we break out of that range, we have this little secondary consolidation and price continues higher once again. And you can see these really big white lines are the most important place on these charts. And all they are is just the most significant pivot that we can possibly find. So you have this swing high following the initial listing. We have this swing high set, which ended up being the range high, and then a couple swing highs that were set as we were basing up against the EMAs. And you'll notice some of the names, or I'll say the strongest breakouts, hold these 10 and 20 EMAs as support the whole time. We can look back here, effectively holding the 10 and 20 EMA the whole time until we start to get some weakening in price action. Same thing on Carvana, holding the 10 and 20 EMA the entire time. Same thing with Kava, right? This one undercut right here. This all indicates strength, right? And as options traders, as traders in general, we are looking for the names with the most strength because as a result, those are going to be the highest probability conditions for us to be right on any given trade. PLTR, again, very similar idea. I'm not really going to recap it. I'm hoping that we're starting to get the idea here. High volume at the lows, break out of this base, consolidate above this pivot, set a new pivot, consolidate up against that, break out against this base on rising volume, retest that prior high. I mean, it's the same story over and over again, right? Reddit, same idea. We have this very clear pivot, right around that 75 spot. We break out above that spot before earnings, right? This is a big one. Really interesting case study here. This name, Reddit, broke out with the VIX above 20, right, which is a pretty big deal, and also with the presidential election in 2 weeks, right? Those are two massive headwinds for equities in general, right? Volatility is incredibly high. A massive kind of global economic event is coming. This name breaks out before that, which really illustrates the strength in this given name before the breakout. And obviously, we have all seen this name made a very significant move after that earnings report. So we can see this theme repeated over and over again, right? Toast, same thing. This is a more recent one. Coin, this one is still kind of sitting below this pivot. I think this week it broke above it eventually, but same idea. Hood, similar idea, right? We have this nice long-term base, retested it at some point, broke out on rising volume. This theme that I'm covering in this lecture repeats itself over and over again in every single example that I have prepared. The moral of the story is that there's a lot of these setups that took place in 2024, and you have 8 names or I don't remember how many names are in this list, 10 names that significantly outperformed the rest of the market using effectively the exact same setup, which should be an indication to you, it doesn't take much in the market, right? You don't need to trade every single name. You don't need to be in every sector. You don't need to hit every trade, but hitting a couple of these massive winners in 2024 isn't the most difficult thing in the world. I mean, I know MMA even hit a couple of these just himself in his tab with share alerts, the PLTR, the Robinhood, I think was one of them as well. So anyway, it doesn't take a genius to find these setups, identify them, and place trades based off of them. And moving on to some examples that took place as recently as this week, Affirm is one that comes to mind recently. This is one that I think I talked about in lecture last week. And even if we zoom out to the weekly here, we have, I'll just clean it up a bit so it's a bit easier to see here. We have this exact setup currently in progress, right? If we take a look, this first kind of pivot into the EMAs, mark that out. We are currently breaking above this pivot, right? And really, I'd probably adjust this up probably to be right around the 50 buck area. So probably a bit higher is the pivot to pay attention to. Let me just shift that up a bit. Probably right around 50 is really the most important spot to pay attention to, which again is right around the same pivot that we hit these first kind of push into the EMAs. Affirm, same exact setup as we've seen over and over again in this PowerPoint already, is now taking place this week, right? We're getting this weekly breakout above this massive pivot, right? Setting new highs on rising volume. This is a setup to be paying attention to for the rest of 2024 and into 2025, right? These are the names that you should be identifying. Similarly, another one starting to make a similar move is SQ, right? Square, same idea, right? Beaten down name, long, I don't know why I can't zoom in. Okay, whatever. Do it this way. Beaten down name, long-term base, breaking out on a rising volume above this significant pivot. These are the sort of setups that end up being the biggest winners in the long term, right? You are buying right after all the institutions have accumulated their positions. They've showed their cards and made it pretty damn clear which direction this stock is heading. All you have to do is define your risk, take a position, and sit tight. So long as your risk isn't hit, be patient and let it sit. That's it. Very, very simple. This pattern repeats over and over again. It's commonly referred to as a stage one base. If you've ever looked into stage analysis at all, that's something that I've definitely been curious about. So anyway, that's the big idea. I wanted to really highlight this because there's so many of these setups either currently breaking out, forming, or in progress. SQ and Affirm are just a couple examples. Thinking of a few more, UPST recently broke out this week, retesting a bit and pulling back. Let's think. I'm trying to think of some more off the top of my head. This one maybe is too late. Yeah, a little bit too late. Anyway, those are the three that come to mind. Affirm and SQ are definitely the most interesting ones to me at this point in time. Yeah, any questions on this so far? I really just wanted to highlight, bring to everybody's attention how explosive these setups really can be. And in the market environment that we're currently in, these setups are very, very prominent and they're incredibly significant movers. So as long as you're defining risk, you're selling into strength, you can definitely be pretty successful. And I don't want to sound like a snake oil salesman here. It's definitely a little bit harder than maybe how I'm explaining, but you got to do the work still. Either way, Norman says LMND. We'll take a look at that really quick. Yeah, Norman. Definitely could qualify. Probably a little bit late. I would say maybe that would be probably the pivot to be paying attention to. But yeah, certainly that's the idea, Norman. You got it. Exactly. These consolidation periods make for massive long-term trends, right? You can see this over and over again. Lewis says, what would you use as take profit targets for these kind of setups? Yeah, excellent question. So one that I traded recently was Hood. So I'll kind of show you how I did that. So Hood, I was a bit late to the party here. So this one had broken out above this 14 spot back in early 2024. I started paying attention to it a little bit more closely right around here when it came back to retest this specific pivot. And I took entry right about here. It was actually a bit higher. I think my actual entry was about 24-ish, 24 something. That was where I entered. My take profit, let's just zoom out a little bit, was on the weekly. I recently sold this position as soon as today, actually. My take profit was this horizontal level right here, which was the low from the IPO of this stock, right? All I'm doing is using these weekly pivots. And this is a position that I would 100% re-enter. However, within the system that I like to follow, I'm going to take profit on names that are up so significantly in a week. Like, for example, Hood alone is up 12% in 3 days. My personal philosophy is that if I don't sell into strength, I'm going to end up selling into weakness. So if I don't sell into this gap up, it's pretty inevitable that this gap will fill. Like, all things considered, it's super extended from the EMAs. It would be absolutely unsurprising if we came back down and retested or filled this gap. or consolidated for a little while. So I'm confident I could get another entry if I wanted it. So I'm going to be selling into the strength. Same thing with A firm. A firm was one that I actually closed the rest of my position today as well. This one, my profit target was actually all the way up to really 63 was the main place that I was looking for on this one. However, I decided to sell after today just because we started to stall at these highs. And it's another name, it's extended. It's up something like 30% from my entry. I'm not going to sit around and just wait for it to come back down and retest. I'm happy to enter this trade. I'm happy to be flexible and get back in. But for now, I'll be patient, right? And I held into today because this looked pretty enticing to closes right at the same exact spot. We got a little gap up. I was looking for follow through today. Didn't get it, so I sold the rest of my position, right? So my general philosophy is that if you're not selling into strength, you will end up selling into weakness. Point blank, period. Price isn't always going to make it to your profit target, but I didn't expect Dayfern to move this quickly. If it was a bit more controlled, I probably would have continued to hold for that, 63 area, but I'm happy to re-enter, right? I think it's really important that you can always re-enter your trades. You can always re-enter. It's not like once you sell, you can never get back in. Gail, yeah, I would certainly say that I'm a swing trader. Swing trading is just the best way for me to trade. It's just my preference. I like having more time to think. I like trading longer term setups. It's just I find that I have more confidence in both myself and the setup when I'm trading something longer term. Recently, I've been trading a lot of shares just because of the amount of, I'll say, uncertainty and economic activity going on in the market with the presidential election. That's the main reason. A lot of earnings. So I've decreased my risk a little bit by just sticking with shares. But if I was, which I have started to explore options again, now that we're through the presidential election and this volatility is starting to cool off a bit. Generally speaking, I'm looking for at minimum 2 weeks till expiration. Generally speaking, I'll go a bit closer to the 4-week side if possible. So I'm not like a long-term swing trader, at least when it comes to options. I'm mostly in a position for maybe 1 to 2 weeks max. Sometimes I'll sell a swing trade within a day if it hits my profit target that quickly. So I will day trade a swing trade if I need to, but I typically don't enter trades with the intent of handling it that way. One important thing, especially in this market, is definitely to not be greedy. And that's the last thing I'll say before we move on to the volume profile. There has been absolutely massive moves in the market. There's no other way to describe it. With that said, there's been massive moves across the board. So just because we've seen these significant moves higher, number one, doesn't mean we're going to continue to see that. And it also doesn't mean you should get confident or cocky and act like you master the market. Unfortunately, if you hit a couple good trades this week, I'm sure you're probably still a good trader, but that doesn't necessarily mean you should get confident. You should think you're the best and you should continue to trade with more and more size just because of how you did in 1 week, right? This is something that I have to remind myself of too. This was an incredibly unique couple of weeks. And you really have to keep that in mind because ultimately it's reasonably likely that we start to see some cooling off in some of these most extended names, some retests of some significant support before we get some other legs higher. We're starting to see some rotation already. Back into mega caps today, we saw Amazon continue to move higher. Semis have been weak recently, so starting to have to watch out for that. And some of our more, I'll say, volatile or growth names have finally started to see some cooling off, like our RK, that sort of thing. So anyway, also should set an alert. Cool. Is Ride another one showing a good setup? I wouldn't be surprised if it is. The problem with Bitcoin miners is that they've just become a much less appetizing instrument ever since the release of the Bitcoin ETFs. Because after the halving, Bitcoin miners have to spend much more money in electricity costs in order to essentially make more money. And you can think of it as the same analogy between gold miners and gold. Generally speaking, the physical commodity significantly outperforms the miner. It's just how it is, right? If you compare gold miners, which should be GDX, and we compare that to GLD, oops, damn it. If we compare GDX to GLD, which is GDX is our gold miner ETF, GLD is the gold ETF, and just compare, oops, I got the wrong stuff. I got the Zoom overlay in my way. All right, so just comparing relative strength wise, right? Gold miners set a high 4 days ago. Gold set a high 3 days ago. Gold miners have already broken back below the EMAs, and gold miners are also, let's see, down 20% off of the highs, where gold, the physical commodity itself, is down 8% off the highs. Zooming out even further, I mean, just looking over the last, I don't know, 10 years probably, and we'll just compare the returns on the two. 10-year return of gold is, let's see, it's not telling me, approximately 100%. 10-year return of miners at this point in time, 80-ish%, 77. So certainly there can be ways to have it make sense to trade the miners for the shorter term trades. As it relates to a longer term investment, though, generally speaking, the commodity itself outperforms the miner, just because there's no overhead, right? There's no room for error, I guess. I'll put it. So anyway, that's why you've seen names like MSTR, which is effectively a pure play on Bitcoin, right? All they really do is just hold and reinvest their profit into Bitcoin. And same with like your Coinbase, right? Coin has significantly outperformed every single miner for the most part. And also these names have outperformed even the commodity itself. So Coin and MSTR have even outperformed Bitcoin on this last move. So anyway, that's my take on Riot. Sorry if that was a bit more long-winded than you were looking for. All right. With that, is there any questions, comments, anybody that anything that you guys want to talk about before we start talking more about the volume profile? Yeah, you're welcome, Pierce. How can you sign up for private coaching? So we don't offer any like private coaching necessarily, but you could reach out to any one of the staff members, and we're always happy to talk with you, set up a call with you in DMs. Yeah, so just feel free to reach out. I'm happy to have a conversation with you. What's the difference between an ETF and a commodity? Yeah, ignorant trader, it's an excellent question. Generally speaking, the ETF or exchange traded fund is paired with the commodity. So, like for example, if we take a look at the GLD ETF and we take a look at gold, oh my god, I keep clicking this. If we take a look at the GLD ETF, oh my god, GLD ETF and compare it to GC, which is gold futures, the performance should be reasonably similar. Just comparing the weekly charts here. And I'll just zoom in so it's a bit more clear. These two charts should look pretty similar, right? They have the same high around three. Oh, actually, whoa, this is interesting. 3.7. Oh, never mind. Yeah, so they have the same high around 3.7. They have the same kind of flag consolidation here. So they're slightly different, but for the most part, they're one and the same. So these ETFs, I don't actually know how GLD is structured. I would assume they just hold physical gold. I'm not entirely sure. Yeah, not entirely sure, to be honest. I haven't actually looked into what this ETF holds, but I would assume they just hold physical gold. And yeah, obviously, if you were to just purchase the commodity, you could either buy the futures, which is effectively directly buying the commodity. It's a pretty much one-to-one, or you could literally just buy gold. That would be the main difference. What do I think about Kava for the end of this week? Yeah, so it's an interesting question. Kava is one that's been on an incredible run. After today, it had quite the negative reaction. Well, not negative reaction, but I'll say really nasty move lower following that report. It's one that I would probably avoid at this point. I would probably wait for it to enter some kind of longer term basing period before getting involved with it again. It's been on a massive run, right? I mean, it's been up at the highs today. It was up 250% this year alone, which is, I mean, huge, right? It's not something to when you consider the average return of the S&P is 10% or less, a name moving 250% in a year is aggressive, right? And there's definitely some concerns that I have about the valuation here. I think right now they're trading at like something like 53 times earnings, which is significant for a restaurant. Maybe that's wrong. I don't exactly know, but anyway, Kava is one that I personally have been avoiding for a while and probably will continue to avoid. I started avoiding Kava because my girlfriend got food poisoning from Kava, so I decided that I didn't want to trade that stock, which obviously cost me a lot of money because I was actually the last time I traded it was down in the 40s, but I had to stick with what I believe in. I can't trade something that I wouldn't use myself, I guess, but maybe I got to get over that. All right. Oh yeah, BTC versus actually trading Bitcoin. Yeah, so the futures versus actually trading Bitcoin, for all intents and purposes, when you're trading the futures, you are effectively trading the raw price of the commodity. Now, futures in general have some intrinsic, or I'll say extrinsic value baked into them because there's that time component, right? So the futures contract technically represents the price of an asset at the end of the month, kind of ish. So it's got some little bit of premium baked into it. Like if we compared BTC futures right now to the actual BTC price, let's see BTC price. BTC price is 89,937. The futures are at 90.3K. So there's a small amount of premium in the futures compared to the raw asset price. And like same thing with gold. If we compare gold 2564. So gold futures is 2564. This is listing it as 2561. So anyway, futures have a slight extrinsic premium price into them, but it's reasonably insignificant. And obviously, if you're actually trading Bitcoin, you physically own that Bitcoin, where technically when you're trading the futures contract, you don't actually own that. Anyway, you could, I guess, if you exercise it. I don't know how that works in the market though. Anyway, all right. So as you see an upcoming pattern in the candle, seem to get, what exactly do you mean? Oh, candlesticks seem to get longer, is maybe what you're saying? Yeah, so Nick, essentially the big idea is that for me, when I can identify a longer term base, such as we had in A firm, right? Pretty easy. You can draw this pivot and pretty clearly see that we're consolidating against this pivot, right? First thing that I do is identify this horizontal pivot. Next thing that I do is identify or examine, I'll say, the volume in the base, right? So you can see here, most of the above average volume days or weeks in this specific case have all been buyers, right? So we're not getting above average volume in sellers. And even so, it's an interesting thing to compare these two periods, right? Comparing these two boxes, to me, there's a very obvious difference, right? One, the average volume is much higher during this period. And two, every above average volume day, or the most significant above average volume days, are bear days or days dominated by sellers, in this case, weeks. Whereas on this side of the chart, once we start to set some higher lows, it is incredibly obvious to me that the most significant above average volume days are dominated by buyers and the overall average volume has decreased, right? You'll notice we entered this significant period of kind of a lull where really nothing was happening. This is kind of the second thing that I'm looking for, right? You're wanting to see that accumulation volume taking place in the base while we're consolidating. And then obviously the final trick, well, I guess the third thing is that you'll want to see these EMAs flip positive. So you'll want to see that 10 above the 20 EMA. It's also generally nice to see this white line, which is the 50 simple moving average, sloping upwards with it acting at supportive of price. And then the final trigger is a move above that base breakout. So me personally, I actually entered this name last week because I thought it was effectively imminent that this thing was going to rip based on last week's volume. I mean, it was effectively going to break out last week significantly, or it was probably going to reverse significantly. So I ended up taking a share buy last week following the earnings report, which was this bar specifically here. Obviously, that ended up paying off. It may not always work. Sometimes it's better to just wait for that trigger. But me personally, I didn't want to wait. The market was hot. The conditions were right. It was time for me to hop in. Yeah, so I don't currently have a tab in only option trades. I used to for a couple of years, but I didn't for a while. So earlier this year, I kind of stopped posting in there for 6 months. I just got busy with a lot of other things during life and wasn't even really trading too often. So we'll see if it comes back one day. I'm not pushing for it super hard, to be honest, but if it's something that you guys are interested in, you can definitely always ask MMA. If he has external motivation, he's definitely more inclined to get something like that set up. But yeah, anyway, that's my answer. I don't have a tab right now. All right, let's talk a little bit about the volume profile, unless there's any other questions. I guess final thought, A firm, SQ. Let's see what else. Hood, definitely still really, really significant pieces of my watch list. I'm pretty heavily looking for these to come back down to these areas of support for another entry. Ooh, Schwab. That's one I've ignored for a while. Oh, SCHD. Never mind. That's not Schwab as a company. Interesting. Yeah, ignorant. If I did have a tab, I mean, obviously, if I did have a tab, I'd be posting what I'm trading. So when I used to have a tab, I would never post something that I wouldn't personally trade myself. So yeah, I mean, right now it would have been mostly share trades. I'm probably going to start gravitating back towards those options trades. I obviously, well, not obviously, but I have already started as of this week, starting to take some options again, moving back away from the shares as I adjust the market conditions. But I'll still be taking some more share trades. Something I'm interested in right now. I really like to look at Microsoft. I was actually very close to taking a trade on this today. It was funny. Somebody asked about this in lecture a couple of weeks ago, uh, and price was all the way down here, and I told them I wasn't interested in getting involved until we get back above this spot, which we're here now. So I have my alert set above 426. If we get at least a daily close above here, I'd be interested in getting in. I need to update this trend. I drew this on mobile, but Microsoft is an interesting one. Yeah, effectively just sitting here waiting for this to break out. It seems really close though. So watching that, Amazon, I was actually hoping to get in above 210, but I ended up sleeping in today because I'm still kind of sick, so didn't get involved in that one, unfortunately. Um, those are kind of the two mega cap trades I'm interested in. Most other things, I'm kind of just interested in sitting. So Microsoft is interesting to me. Amazon is interesting to me. One other one that's starting to hit kind of my ideas list is Penn. This is one that I just found today. It's a bit of a shorter term base, but it has kind of an interesting look to it. It may need more time. I can definitely be open to waiting a bit more, but this one has quite the interesting look to it. Also, maybe this is a great place to start the volume profile portion of the lecture, but this is the next idea that I'm interested in. Probably be looking to grab it on a move back down to this $20 area if it comes. If it doesn't come, I'll probably just end up missing out on it, but that's okay. Anyway, yeah, that's the last thing I'm looking at. But right now, I'm really heavily focused on just finding the most significant themes in the market right now because frankly put, you don't get names that accelerate 20, 30% higher in a single week unless the market is incredibly favorable for trading, which means for me, it's time for me to keep the foot on the gas into the end of the year until other proven otherwise. Obviously, within risk, obviously being confident and cautious when we're extended like we are. But anyway, hopefully that answers some questions. So, yeah, ignorant and Gail. I mean, like I said, if you guys are interested in a tab, you can certainly ask MMA. All right. With that, let's start talking about the volume profile. I think this is probably a good place to start covering it. So, without further ado, I'll ask the question: how many of you have heard the term volume profile before? How many of you are familiar with the volume profile? Does anybody know what I'm talking about? Is this a new concept to everybody? Not really good with it. Awesome. Gail's heard of it. Awesome. Heard it, heard it, heard it. Cool. All right, let's talk about it. So, volume profile is kind of the last piece in my tool belt. That was not really the correct way to say that, but it's the kind of last tool in my tool belt that I use when forming trade ideas. So, I love 10 and 20 EMAs, 50 SMA, 200 SMA, obviously key pivots, and volume. The last thing is the volume profile. And the cool thing about the volume profile is compared to normal volume, which shows volume by time, right? So all these volume bars represent the amount of shares traded in a given time frame. The volume profile, which I changed the color to blue of, represents the amount of shares traded at a given price. And I'll just clean this up a little bit so we can see everything more clearly. The volume profile represents shares traded at a given price. And the reason that this matters is because it gives us a really good idea of where the strongest support and resistance levels are and where the weakest areas of support and resistance are. So without even looking at the price action, I can tell you right now that there's a significant lack of resistance in this area on Penn. I can also tell you without even looking at the chart that the bottom of this shelf right here is going to be a significant area of resistance. And the top of this area right here is going to be a significant area of support. And I don't even need to be looking at the chart to make these determinations. Sorry, I think my headphones died. Hopefully you guys can still hear me, but if not, just let me know. Anyway, I don't even need to be looking at price action to quickly understand where the most important levels of support and resistance lie, which is really cool. So a couple important parts in terminology for us to define. These areas that stick out on the volume shelf, here, 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 or volume profile, I should say, are referred to as volume shelves. They're referred to as high volume nodes. Those are kind of the two most common names for them. Essentially, these represent areas of more significant resistance. And the reason we know that is because these are volume bars, right, on the left. Think of these as just, all they are is volume bars. And they're just showing us the amount of shares that have been traded at a given price. And you'll notice pretty frequently, the areas with the most significant shelves end up being a key area of support resistance. Like, check this out. We have the top of a shelf right here. If I mark the top of that shelf and extend this level to the left, it's pretty easy to tell that this is a level of support, right? Or in this case, resistance, right? Pretty easy to identify that. And even zooming out, we could probably see, oh, wow, this thing's super beaten down. Anyway, so that is the kind of way to define resistance on the volume profile. The next is a volume gap, or what also could be referred to as a low volume node, which is an area like this. And I think hopefully these terms define themselves pretty easily, right? You can see the shelf protrudes pretty significantly in the volume profile, and the gap pretty significantly recedes in the volume profile. So these volume gaps are areas where there is lacks of liquidity, meaning that there is a lower interest of buyers and sellers in this specific region. So how that relates to price action is there's a lower chance of price reversing in these areas of volume gaps. And generally speaking, price moves very rapidly through these volume gaps. And we can see that in this gap, right, where we have this bar and this bar, where price essentially cut through this entire volume gap in a single week, right? These are weekly candle charts. Price moved through this gap in 1 week. Whereas once you get to these shelves, you can see price typically begins to consolidate, right, or reverses, which we can see illustrated in these areas. And the cool thing about Penn right now is this is actually a trade that is currently, as we speak, breaking into a volume gap, also breaking above the prior swing highs, and potentially setting up to move all the way up to this 23 area to the other side of this volume gap. So the volume profile is a really, really powerful tool to identify areas of support resistance. There's one last thing that you might be seeing, which is this pink line here, or at least I have it labeled as a pink line, which is the volume point of control, or the VPOC, or the POC. Essentially, this represents the most significant area of support on a given chart in a given time frame. So right now, over the last 3 years, this level 1873 is the most significant and important area of support on this chart. If we take a look at A-Firm, the yearly chart right here, it should be pretty obvious why I wanted to take my entry on earnings, right? We hit this POC, reversed, and then closed back above this pivot right here, approximately, right? Pretty easy to want to get long on something like that, right? It's not too complicated. Let's think something like Microsoft even. This one's a bit messier, but as you can see, pretty nice reclaim of that point of control. We're starting to move back above the shelf, and you could almost see why this level matters even more to me. This 425 is above these kind of areas of more significant volume shelves. And once we clear this, the amount of resistance starts to drop off more and more. And the most important levels are going to be these pivots, right? 438, 441, 448, all the way up to 468. So the volume profile is definitely a really, really incredible tool. It's one that I love to use to identify areas of strong support, areas of strong resistance, areas of lacks of liquidity. And the reason being, as options traders, we want to be in options trades when price is moving through these gaps, right? Oops, PENN. Reason being, when price moves through these volume gaps, it moves quicker. When price moves quicker, implied volatility typically increases, which also increases the value of our options contracts. So when price moves quickly, we get paid quicker, which is a pretty good thing to be mindful of, right? And also risk decreases because we know we have less overhead resistance, more support below. So it also helps from a risk standpoint. Anyway, that's kind of the short introduction of the volume profile. I don't think there's any more really to be said at this point in time. Any questions, comments so far? Or do we want to just look at a couple of examples? I know, Nando. We need alerts. You're gonna have to ask MMA for the tab back. Sure, Norman. Let's take a look at CRM. Okay, Norman. So this doesn't quite align with exactly what we're talking about tonight. So this thing is pretty long gone. It's well far away from any volume shelf. It's quite far out of any specific base. So this isn't exactly what we're looking for today. While this is still quite the ripper, not quite the examples that we're looking for. But yeah, I mean, it looks solid. We can look at a shorter time frame and find a more lower time frame point of control. So if you're a short-term trader, you definitely want to see this 340 spot hold. Yeah, so Ignorant, that's a great question. How would I then apply this to my regular charting methods? Yeah, so me personally, I'm just going to be using these volume shelves as areas of support. So we could take a look. Let's see, different trade that I took recently with this. I don't remember if Hood. Yeah, actually, Hood is a great example. So Hood recently made a significant move lower following their earnings report. I took entry on this day right here, where we got this hammer after earnings directly off of this significant volume shelf. Reason being, risk is incredibly well defined, right? I ended up buying shares on this position just because there was some risk we were going into presidential elections. Obviously, I got lucky with the result of the presidential election and continued moves in crypto, blah, blah, blah. But anyway, the trade still happened. So I entered right here at this 2330 area with a stop below this pivot, right? So pretty clear to tell why I took this trade. We got a nice move directly off that shelf following this earnings report. So we got some significant news out of the way. Also, we got a pullback right into the moving averages. If you look at it this way as well. So pull back right into the 50 simple moving average, right into this volume profile here, which I'll change the color back so everybody can see a bit more clearly. Cool. So pull back into the 50 simple, pull back into this volume shelf on the daily. Really well-defined risk, right? My risk is defined on a daily close below 22.28, which is pretty much, let's see, 5% decline, which on shares is absolutely nothing, especially considering that my first profit target was 20% higher back to the swing high, which we made it there in lower time than I originally expected, which was a positive. Yeah, so this is how I applied this specific concept to one. Yeah. Trade entries just because I'm more just like any. Oh, you lost me. Is this better? Sorry, I'm fighting with these headphones dying and nothing else is going to plan, but we're still here. Cool. What's the name of that indicator? Green, red band. Yeah, so it's called the I mean, that's a custom indicator. It's essentially called like the EMA cloud. I've shared it before, and what I could do is I could post probably another link to it. So let me grab that link really quick for you. Yeah, and I don't typically use the volume profile in lower time frames just because generally speaking, I'm looking for pivots on the higher time frames to trade those on lower time frames. And one example I was trying to say before I got distracted with my mic cutting out is that, for example, if we look at something, I think Amazon is maybe a decent recent example. Not quite. Let's try another one. A firm. No. Anyway, I can't think of one example recently that I've taken just because I probably haven't. Microsoft, I guess. Not quite. Anyway, levels on the higher time frames for me drive trades on the lower time frames. So let's say, for example, I'm looking to get into a swing trade above this 425.72 spot. Today, I was looking for an hourly close above this level, which I got. However, it was a bit early in the day for me to want to take a swing trade on this. It was 8:30, 2 hours after the open. And I wanted to see a retest of this before I got in. And when we retested, we broke below. So I was like, okay, I guess I'm just not going to trade this. So Levels that I get from the higher time frames drive the way that I enter and exit on the lower time frames, if that makes sense. Like the levels that I get come from the daily and the weekly. Do I enter at the point of control? Yeah, so you can enter directly at the point of control. Generally speaking, I don't enter directly at support, and reason being, I like to wait and see if buyers are going to show up and stage some kind of reversal, right? For me personally, I don't want to be somebody who's just buying the dip just because price has dropped. Now, for example, if price is significantly trending higher, I'll feel more comfortable buying the dip on something. But for something that isn't in an established uptrend, generally speaking, it's not a good idea to just blindly purchase something at support. You'll want to, at minimum, see at least some reversal starting to stage with increasing buying volume or some kind of reversal bar at the lows. So I'm not personally interested in bottom ticking every stock. Generally speaking, my entries are at a more optimal place than most other people. So as a result, I can afford to wait a little bit for some amount of buyers to step in before I go too crazy. Like, for example, Hood is a great one. I don't remember the exact time I entered, honestly. I don't remember. I probably entered, I don't actually think I entered on this day. I think I entered the next day. Let's see if I look at the hourly. I don't remember where I entered this, honestly. I'd have to look at the time I got in. But anyway, Hood, for example, I wasn't interested in buying. I think I'm lying. I don't think I actually bought on this day. I think I bought on the next day because I saw, okay, we had a nice daily close with this hammer. We had another hold of the 50 simple the very next day. So I was like, okay, this looks like this is going to hold. It looks like buyers are starting to step in here. So I'll hop in long. I was interested in just trying to find the dead bottom. And same thing with A firm. While I wasn't trading directly off this point of control, I wasn't interested in trying to buy it right at the point of control. For A firm, I think I actually bought when it got back above 45-ish. I don't even know where that level went. It should be here. Yeah, 45. So A firm, it came down pretty significantly. I bought on this hourly close back above 45 because this was the pivot from the daily time frame. So I bought this one like $2 or $3 off the lows. I did not bottom ticket by any means, but I'm not in the business of trying to catch bottoms or trying to catch tops. It's just not, it's not realistic, right? There's been probably a couple trades in my whole life where I perfectly timed the bottom and perfectly timed the top. It's just not worth the mental capital for me. I'd rather wait for a little bit of confirmation. Yeah. Does that answer your question, Gail? Awesome. Yeah, great questions, everybody, tonight. That was awesome. Cool. Anything else we want to talk about before we call this lecture good? Cool. I didn't see your list, Norman. What time am I waking up for school tomorrow? I'll wake up at 6:30 and I'll get you breakfast and I'll drive you to the high school. I know your senior prom's coming up soon, Nando, so I want to make sure you get there on time. I didn't see your list on Norman. You'll have to send it again. All right, everybody. Appreciate the time tonight. Can I show? Yeah, of course, Arrow. Let's take a look at NVIDIA. Where is it? NVIDIA. Is there anything specific you want me to cover? Or you just wanted to see it again? Cool. Awesome. CR wrote this on a sticky note. All right. I love ending lectures by taking a look at whatever Norman's got cooking. So let's take a look at some names that he's looking at. CRM, I think we already looked at this one. Yeah, CRM. I mean, the answer is, Norman, this one's way too extended for me to want to get involved. If I'm not already long on this one, I'm not touching it, and I'm not already long, so I'm not getting involved here. If anything, I'm going to have to wait for a retracement back to the EMAs, which is at least the 320. AVGO. Oh, this is actually kind of interesting. So this one just retraced to the volume profile here, volume shelf, I should say. Let's see what the weekly looks like. Yeah, this actually doesn't look too bad, Norman. Volume starting to contract here on the weekly. We got about a month until earnings. higher lows. Yeah, I mean, if I wanted to enter, or if you wanted to enter, Norman, this 50 simple moving average seems like the place to get involved. Probably with a stop below these swing lows around 167.50-ish. This one doesn't look bad. You took AB go swing 174. Oh, so you're a red. Oh, you're not that. Yeah, you're fine. Yeah, I don't mind that actually. I mean, I wouldn't say that this is for sure the bottom. This isn't much of a reversal bar in my opinion, but not a bad place to be considering to get long. But I'd definitely stop out if we broke below 167. Okay, AMSC. Yeah, I'm not even gonna talk about that, Norman. We know what I'm gonna say. Team. Okay, yep, you know what I'm gonna say. D-Dog. Okay, this one's a bit more interesting. Okay, this is one that we could work with. So this is a really interesting one, Norman. So this one's got maybe some kind of flag going on. Oh yeah, this one's really interesting, Norman. This is actually pretty nice. Hang on. You might be able to do something here. Yeah, I actually don't mind this one at all, Norman. This is probably the best one that you sent, or at least the most actionable name. So check this out. This is something that you'd want to be seeing, right? We're seeing the 50 SMA hold as support. We got rising volume last week. Earnings, the name was mostly flat, but good to see it out of the way. Biggest red flag on this one is that it's not moving higher with the rest of the market, but it had a big day today when the rest of the market was pretty flat. So maybe just starting to get some relative strength here popping out. Obviously, the pivot here to be watching is this 131 area. This is the place to beat 131. Zoom in here on the daily. Pretty clear that that's still the case. Your next targets above are also pretty clear, 134, 138. And a nice hold of the following point of control. But the 200 simple today, yeah, really, really high volume here. Something's definitely going to happen. This thing's definitely either breaking out or breaking down with just this amount of volume. Just a matter of what direction. At this point, I'd probably set alerts for a break above here or a move back down to here. Yeah, POC is the point of control. Yeah, this one's actually the best one that you sent, Norman. This is definitely something that you could absolutely take a trade on. I'd be interested on a break above this 131 area or another retest of this 122. But I don't know. If it retests again, it would be maybe a bit of a concern. Oh, what is it? Yeah, so the point of control is essentially the most significant area of support based on the volume profile. So it's that pink line here. This is where the most buying and selling action has taken place in a given equity. So it's essentially the strongest level of support, which D-Dog is currently sitting right above that area, which, yeah, this is actually an interesting one, Norman. I like it. It reminds me of this one, Penn, where it's kind of lagging the rest of the market, but still a nice setup overall. I like it, dude. That's the favorite thing that you sent tonight for sure. At least the most actionable now. I mean, obviously everything else has a bunch of relative strength, but that is definitely one that you could actually trade, sooner than later. Keep me updated if you actually end up hitting that. I'd be interested to see how that goes for you. All right, everybody. That's gonna do it for me tonight. As always, appreciate your guys' time, and I will see you all in the next one. Oh, I can help you with that, Georgie. Yeah, so I'll show you just my default settings for the volume profile. We go here. So I changed this price per row height mode to tick size. Typically, it's set to automatic. Then I change on expansion from yes to no. Changing it to no will put it on the left side of the chart rather than the right. And then I change this opacity to 20% and then change show value area to no. And then I just hide and show some stuff and change some colors. So yeah, the biggest one is changing on expansion to no and changing price per row height mode to tick size instead of automatic. If it's automatic, it'll look like this, which is it's still fine. It's just a bit less precise, but maybe sometimes less precision is a little bit nicer. Oh, you're on TradingView. That may be why. I don't actually know if TradingView will go the other direction. I don't know if it'll let you swap it, honestly. I'm not sure about TradingView though. Maybe there's a custom volume indicator that'll do it the other way. I don't really know. All All right, everybody. Yeah, thanks again for your time. As always, feel free to just go ahead and reach out if you have any questions or concerns. And yeah, hope you guys have a great rest of your night. And sorry again for missing last night. I apologize. Ooh, George. George got it. Nice. That looks good. Cool. Thanks, everybody. See you guys.